Hey guys, Joseph Henson here with Henson CPA Group, and this week I wanted to discuss one of the things that is on everyone's mind. If it's not on your mind, it probably should be. It is going to be getting ready for your taxes come January, February, March, April of next year. So, today, top 10 things to do today to be ready for tax season. I am Joseph Henson CPA with Henson CPA Group, and this is a topic that is extremely important with it being the end of December, middle of December. Why? Why does tax readiness matter? Number one, it will keep you compliant with IRS regulations. It will help you avoid costly penalties and fines. If you don't file on time, if you fail to file a extension, you can have failure to file penalties, you can have failure to pay penalties. There's a slew of penalties that can happen, and those can add up quickly. I've seen those go as far as 10, 20, 30,000 dollars in penalties for not paying and filing taxes. And getting ready, why does it matter? Maximize your deductions and your tax savings. Everyone wants to pay less in taxes. Great. The problem is people who want to do that typically don't tell me they want to go ahead and start saving money on taxes until January, February when they come to me as a new client. There is not always something we can do. Now, hear me out. There is stuff that can happen after year end, but a lot of it needs to happen prior to year end. The first thing you, as a business owner or veterinary clinic, need to do is organize your financial records. You need to gather different items for your income statement, expense receipts. You need to gather bank statements. You need to make sure that your income that is going into your account is appropriate per your veterinary software, Vetter, EasyVet, Covetrus, Avamark, whatever it is. You need to make sure that what you show is accurate and ties out. How do you do this? Use an accounting software to streamline your record keeping. QuickBooks Online is one that you can use. Zero, there's other ones that are also available out there. Just make sure that whatever you're using can capture those expenses and those incomes year round. Number two, separate your personal and business finances. This is one of my biggest complaints when I'm talking to someone is when they say, "Hey, I have a business, but I'm going to be honest with you, I have to go through and tell you if this is a business or personal expense because a lot of what I do is related to my personal account. I almost use my business account as a personal bank account. That is not okay. That will never be okay. And in fact, that can get you into serious trouble. If you're doing that, I will say it today, avoid commingling funds to simplify your tracking. Do that because if the IRS ever wants to look at your bank statements because something is questionable, they will have that authority. I will have a quick disclaimer. Never talk to the IRS without someone to represent you because that is when you can get into a lot of trouble. Next, review last year's tax return. Well, that's in the past. Why does that matter? I can tell you why that matters. You can use last year's tax return to see areas of improvement. If you feel that you paid way too much last year and you don't see the money in the bank that you show on your tax return, why is that? Well, it could be that some stuff was misclassified, and you should always know what's happening on your return. What are you deducting? What are some credits that you might have that you missed? Are you in an industry that has a lot of cost of goods sold, like veterinarians? Well, if your cost of goods sold isn't showing up, something's wrong. And you want to make sure that you're using historical data to prepare for the future. This year might not have been a great year, and you're seeing what happened last year, and you might realize, hey, we still had growth overall. It's one of those things that you should always look at last year's return to see and compare. Update your payroll system. Ensure that your employees and your contractors' forms are accurate. Make sure that the addresses for your employees and contractors are accurate. You don't want delays here. You want to make sure these are being filed appropriately. Gather the appropriate W-4s, W-9s, and make sure that all the information flows accurately. What is a W-4? That's for your employees. What is a W-9? That's for your contractors. Before you pay anyone that's working on your business that is not an employee, you want to gather a W-9 so you can appropriately track the payments to report it to the IRS if it's above $600. You do that with the Form 1099. This is something that I see people get in trouble with. They're not gathering the appropriate forms before paying people. And at year end, they're like, I don't know what to do. They won't give me their social security number and I can't get a hold of them. That's on you as a business owner. They should be providing that to you, but you have to make sure before you ever write them that first check, you do have all that. And while you're at it, go ahead and verify the social that you put in for your W 2 employee is accurate. Like I said, gather their latest address, make sure it's up to date so that when you mail out the forms timely for year end, they will get all of that on time. Track your quarterly estimated tax payments. You want to confirm your payments are aligning with your tax liability. If you are not a person who has a typical paycheck to paycheck job where you're just getting paychecks and they take payments out, but you owe $30,000 to $40,000 at year end, yes, I see it happen because of self-employment. $20,000 to $30,000, that's going to be hard for some people to come up with. A lot of people will struggle with that. You want to make sure that you pay those payments quarterly so that, again, you also don't get any kind of penalty or fine for not paying those appropriately. And that's something that you have deadlines for. And if you don't know what those are, let me know. Happy to talk to you through it. Next, identify your tax deductible expenses. Some common ones that you probably have that you don't always think about are going to be your office supplies, travel if it's for business. Again, if it's for business, is deductible, and your home office expenses if you have a home office. You want to keep detailed records and receipts for each deduction. You want to make sure that if it's ever questioned, you can say, hey, yeah, I went to steakhouse with this client to discuss this matter on this day. That's why it was $75. That's why it was $100. It was a business lunch. I was talking with an advisor, and this is something that uh, we talked to over lunch, and I wanted to treat them to that. You have to keep these details for IRS compliance. Verify your entity's tax classification. Shouldn't be that big of a deal, right? There's a lot of people I've talked to who say they have an LLC that has made an S corp election when in reality the only thing they have is an LLC, a disregarded entity, or worse, they have a partnership and they did not realize this. That can cause a lot of headaches. That can cause a lot of problems. Uh, if you've never filed a tax return, there's a lot of issues there. If you have an S corp that doesn't file timely, there's a pretty big penalty for every shareholder. You want to make sure you have this stuff buttoned up and ready to go. Also, with the appropriate classification, you can explore options to minimize your tax liability. If you paid over $10,000 in tax last year, you're at the point where you need to look at other things you can do to minimize that liability this year. You are near the end, so it's going to get a lot trickier, but there's always something that can be done if you act before it's too late. Now, the next thing you want to do is conduct a mid-year, I always say mid-year, and a end of year financial review. Your financials will change day to day. You should be meeting with your accountant, your fractional CFO, your CPA multiple times a year to see where your business is at. If you're not setting goals with your CFO, you need to start doing that. This is the perfect time to look at 2025 and decide what the next step in business is. If you want to grow, you can't do that by accident. It takes consistent work day in and day out to do that. One of those things will be analyzing your profit and loss statements. Numbers are complicated, numbers are scary. Not knowing your numbers is also one of the number one reasons businesses fail, in my opinion. Also, conducting your mid year and end of year financial review will allow you to avoid or address discrepancies before it's too late. If you're looking at your numbers and realize that your utilities are 40% higher than previous years, well, hey, why is that? Is something miscategorized? Is something are you have you been overpaying on water because you didn't realize you had a leak and your average water bill went from $200 to $500. This is something that does happen, and you need to look at these and understand it's going to continue happening. Work with a tax professional. Schedule a consultation with a CPA. It can be me, it can be someone else. I don't care who it is. You need to work with a tax professional, especially if you're a business owner who makes more than $200,000 a year in just income, not even before expenses. You're to the point you need to start working with someone. You're too big to do it yourself. If you're grossing more than if you're grossing seven figures, $1 million or more, you are way too big to try to do this yourself. There's a lot of places you can do it yourself. This is not one of them. Why? Because you can discuss tax strategies for savings and staying compliant with a professional. Plan for upcoming changes in tax law. Tax law is complicated. We are always seeing new things come out. We're seeing new interpretations. You have to plan for those. There could be some changes happening at the end of 2025 that will affect business owners, especially S corps, if things aren't handled by Congress. These are things that you have to know so you can adjust your tax strategy accordingly. You can't just assume everything's going to stay the same. You can't assume stuff won't sunset within tax law. But like I said in the last slide, working with a professional, these are things you can prepare for and get going from there. That's all I have today. Are you ready for tax season? If not, contact Henson CPA Group for personalized assistance. We're here to help. You can send me an email at joseph@hensoncpagroup.com. Joseph does have two E's. I'm always happy to hear from you guys. And if you have any questions,